Hey there, welcome back to No Pants Profits. My name's Richard, and I'm still sitting here with no pants and hopefully making a lot of profits. And about a week ago, as of right now when this video is published, I called something out. I took a guess, and I said, I think Kathy Woods of Invest, who I happen to have some swag from, very nice swag, Nike swag from back in the day when I had ARKK and all of her ETFs before they went wah, wah. Kathy Woods was going to start with Titan, which is an app that's on your phone, a venture capital fund. And, if you're someone that's watched this channel before, even if you're not, they're not the first player in the game. There's someone else in that game. Now, it's not just a venture capital fund, it's a venture capital fund for everyone. So you don't need to be an accredited investor or a qualified investor, and I guarantee you a lot of you watching don't even know what that means, but it means that you've got over $1 million in net worth, not including your house, or you've got $200,000 a year or $300,000 a year made for the past 2 years, $200,000 alone, $300,000 with a spouse, with the expectation to make that much, or you have a financial license. You really can't get into investing in companies before they IPO. But the first company you could actually do that with is a company that we talked about in this channel, and unfortunately, they don't have any swag yet, but they're actually called Sweater. And we've done a lot of videos on Sweater. And Sweater's been in the game since about May. So, just to show you, I made my first investment into Sweater all the way back in May. And that was one of the original way that the SEC allowed normal people to get into venture capital funds. But I can look at the NAV, which is the net asset value, which is the value of all of the companies in the fund, because it doesn't trade like a stock. It only trades when there's an event, meaning that the company raises more money and different things like that. But you can see, over history, Sweater started... Sweater started in April at $20 a share NAV. And, arkinvest literally just started. Now, what do I mean? I mean, arkinvest Ventures. Sorry, Ark Ventures literally just started. If we take a look, fund details. Started on 9/23, which actually started a couple days later, but that's what they're saying because I think they took private investment before they took public investment in the Titan app, and you can't invest in Ark Ventures directly. You have to invest through the application Titan. But what I want to do is I'm going to give you the quick and dirty in the first 2 or 3 minutes because I know a lot of you may just watch the first 2 or 3 minutes. I'm going to dig into this quick and dirty, but I want to give you a quick and dirty whether you should invest in the Ark Venture Fund, right here, through the Titan app, or in the Cashmere Fund from Sweater. Now, what makes me qualified to do this? I've looked at every single one of the companies that are in these funds. I've gone over every single one of the companies that are in the funds. I have a relationship, not with Kathy, unfortunately, but I have a relationship with all the executives at both Sweater and at Titan. Kind of, they say Richard, and it's not an employee that's there. They know who they're talking about. They're talking about Richard from No Pants. I've talked to Jesse, talked to Clay right after the launch of this ARK fund. We don't have him on the channel yet, but there is a whole interview with Jesse. Here's the lowdown. Here's the dirty of these two funds. They both are structured almost exactly the same. We're going to go into this, but I want to answer the question first. Here's the thing. Titan's fund, which is the ARK Ventures fund, is actually a shorter term investment with a potentially lower return. You might go, huh? But it also means it's less risky. And the reason is because Kathy Wood, and the ARK Ventures Fund is going to companies that are later in the game. 4 out of the 5 companies that have been announced for the ARK Ventures Fund so far, definitely check out those 5 companies. There's playlists all over. 4 out of those 5 companies are in a position where they could be acquired right now by the right company. Now, I don't mean right now because the interest rates are going up and no big company wants to spend money buying another company. You're doing an acquisition or to acquire, ACUHIRE, just hiring the employees, but they're in good positions. Only one of those companies is a true, seed round or a Series A or Series B. Now, by total contrast, Sweater, on the other hand, has a lot of less mature companies. Now, what does that mean? Sweater is a lot more risky than what Kathy's doing. I know. Something more risky than Kathy Wood. You thought you'd never hear that. But Sweater's a lot more risky than what Kathy's doing. But with risk comes reward. So you have a much higher upside potential in what Sweater is doing than you may have in what ARK Ventures is doing. ARK Ventures, believe it or not, I can't believe I'm saying this out loud, Kathy Wood is playing it safe. which sounds insane, but Cathie Wood is playing it safe. Those are words I never thought I'd say out of my mouth. So here's the thing. In the first 5 minutes here, I want to tell you, if you are a shorter term investor, remember, these are both long-term investments. These are both going to take, 3, 4, 5 years to even start putting fruit. But if you are a shorter term investor, which is less risk averse, but I mean, venture's still very risky, but if you're a shorter term investor, which is less risk averse, ARK Venture is for you. It sounds weird, but ARK Venture is for you. But if you are want to take more risk, but bigger risk, bigger rewards, kind of like you can buy Bitcoin, or you could have bought Dogecoin back in the day. I hate to bring it back to crypto, but Dogecoin grew a lot more than Bitcoin at the height. Shiba, 0.0000001, kind of similar to what we're looking at with Sweater Investments. It has much more potential to grow, but it also has much more potential to fail. So we're going to dig into all these companies. I'm going to show you the valuations of these companies. I've showed it before, but I want to show my work on this answer. But here's the simple answer. If you are a medium-term investor, ARK Ventures is going to be better than you. Again, you're not trading this out of this every single day. It's a medium-term investment. If you are a long-term investor and want to make more over the long run, then Sweater is for you. Now, personally, I am what they call a both-term investor, so I am invested in both, because I do short-term, I do medium-term, I do long-term. I have all 3 different buckets, and that's why I use all these different apps. I spoke to the member experience team at Titan the other day, and I spent an hour and a half telling them, what do I do? What do I do in my investing world? So, I told them I have 20 different investment accounts, 30 different investment accounts. Tax time's a nightmare, but here's the reality. Medium-term venture investments, ARK Ventures, with a reasonable upside and a lower chance of failure. Long-term venture investments with a higher chance of failure, and I say that in a good way, because a higher chance of failure also means you'll make more when they're successful, is with Sweater Ventures. But what I want to do now is I want to share with you, so that should answer what's going on. I want to share with you everything. I'm a very transparent person, so I'm going to show you the views that have been had on videos about each of these companies so far. Now remember, the ARK Ventures videos are a couple days old, but I do want to share this. So you'll see these are, and this is my rights to share this, and you're welcome to zoom in if you want to see this, but this is Sweater, and these are all the videos I've made on Sweater. That'll give you likes, dislikes. I don't think there's any dislikes. I don't think anybody intentionally dislikes Sweater, but that'll give you likes, dislikes. That will give you the number of views and everything like that for all of my Sweater content so far. And this is as of September 30th, 2022 at 2:21 a.m. So this is all the Sweater information that's been available so far on No Pants Profits. Now, just to show you the flip side, again, this is a little bit older. This is all of the arkinvest by Titan information. So you can see this is all the arkinvest by Titan information, and you can see this is in a much shorter period of time. So if you extrapolate this out over time, normal people, now it is a buzzword, it does have Cathie Wood in it, but if you extrapolate this out over time, normal people are more likely to look at the ARK stuff than the Sweater stuff. That's just a fact of life. But I've also, ARK is new, ARK is hot, and I'm not gonna lie, I've put Cathie Wood, I put Mama Cathie in all of these feeds here. But what I want to do now is I want you to see, you can screenshot this, you can hold on to this. Again, this is as of September, the date's in the top right corner, but you can see that, and you can then again see, just to kind of see how things are going, because I am a believer in full transparency. So, let's talk about how both of them market each other. We're going to go deep dive now. We're going to look at how they market each other. We're going to look at how they advertise, the limitations of their fund. And then we're going to take a look at each of the companies in the fund and see where they are along the exit stage. Again, if you wanted your answer, you already have your answer. Medium term, the best answer is to go with Titan, to go with ARK Ventures via Titan. And long term, I think that Sweater is a great thing, and I am in both of them. Not in Titan yet, and I'll get to you why I'm not in Titan yet. It's a little weird, but I am in both of them. So I don't feel any ill will towards either ones, but I am going to give you a critique. But let's talk about how they advertise. This is Sweater, and this is how Sweater advertised what they did, what they do. And I love this, and if you haven't seen my interview with Jesse Randall, the CEO, he even talked about the monkey in this video. But here, let's take a look at how Sweater advertises their venture fund.
This is venture capital. It's just rich people getting richer. And this is Jesse. Jesse knew a lot about investing. He helped VC firms turn money into more money, a lot more money. But now he wants to work for you. And that's why he made Sweater, a way for everyone to invest in venture capital. Sweater's team of analysts invests your money in a carefully curated portfolio of smart startups that haven't gone public yet. Sweater reduces the buy-in of venture capital, which is typically millions, to something more realistic. Sweater is the first VC fund for everyone. Sign up now to be first to get access. Join our tight-knit community today.
And I do agree, Sweater was the first VC fund for everybody. But there's a new player in the game, and that player has a much bigger name. And that name is Cathie Woods. Now, I learned about this last week, about a week ago, so September 23rd, September 24th, when I was on a call with Titan learning about their new... The other cool thing about Titan is they do have more diversified funds. So you can invest in real estate in Titan, and you can invest in the normal stock market. You can invest in crypto. Titan is an actual broker of normal stocks as well as this venture capital fund. But what's weird is they are kind of really modeled off of each other, but Titan is really the second one to do this. And I do say I like both of them, but I'll give you pros and cons. But let's take a look at how ARK Ventures is actually introducing their product. Then we're going to dig into each of the products.
Invest in venture capital? Welcome to the ARK Venture Fund, exclusively on Titan. You'll have your capital invested in some of the most disruptive and innovative companies operating today. From seed stage upstarts to publicly listed giants. Let's get started.
So that's one of Cathie's videos. We're going to look at all three of them. This is everything that Cathie has made public. Well, Cathie and Titan have made public on YouTube right now.
Welcome to the ARK Venture Fund. Since our founding in 2014, ARK has invested exclusively in public equities. Until now, the ARK Venture Fund is venture capital ARK style. We're leveraging our world-class research and our obsessive passion for innovation to invest in some of the most disruptive companies on the planet at any stage, from seed to public listing. Now here's your chance to invest directly in a venture fund managed by ARK and available exclusively on Titan.
The one thing I do want to say is I do believe it's managed exclusively on Titan for non-accredited investors, but I do believe that, and please, in the comments, in email, correct me if I'm wrong, but I do believe that accredited investors can invest. I know they can in Sweater, but accredited investors can also invest off the app in Cathie Woods' fund as well, just in logic. And let's look at how Cathie picks the stocks for the venture fund, and then we're going to go ahead and we are going to dig into each of the companies, and we're going to take a look at their valuation, exits, and other things like that.
A common question I'm asked is, Cathie, how do you pick the stocks in your portfolios? Behind every investment decision ARK makes is a world-class, intensive research process. Our research has identified 5 innovation platforms that are evolving at the same time. This has never happened. They are artificial intelligence, adaptive robotics, blockchain technology, energy storage, and genomic sequencing. Together, these innovations involve 14 underlying technologies, and these technologies are blurring the lines between and among economic sectors. They are radically transforming our lives and the global economy, and we expect this to continue for the next 5 to 10 to 20 years. With ARK Venture, we aim to invest in the leaders, accelerators, and beneficiaries of disruptive innovation, regardless of stage. Investing your capital in these companies is a privilege we take very seriously. By investing in ARK Venture exclusively on Titan, you'll receive updates on ARK's research and the investments we are making on your behalf. Like our partners at Titan, we aim to make you the most knowledgeable and confident investors you've ever been.
And I will say, as Kathy says there, I do think that Titan makes it is the most knowledgeable investment app out there right now. And I do kind of want to show you that, but I also I do want to be fair to both sides because again, I'm not actually playing favorites here. So I want to see if they have a video that kind of explains, Sweater. Sweater versus equity crowdfunding, but I'm just looking for a Sweater explainer. Let's take a look at this. Because this, I think I gave Kathy airtime, and I think I've got to give Sweater some airtime other than a video of a monkey. So let's take a look at...
Welcome to Venture 101. As we open the venture capital asset class to everyone, we believe it's important to provide educational resources on venture investing and the entire venture landscape. Together, we're building a new type of venture community, so it's important that we share our tools and resources to get the full potential out of it. In this section of the app, you'll find educational videos and resources covering frequently asked questions, investing strategies, and everything else in and around the world of venture. You'll also find posts and videos that specifically show how Sweater manages your VC investment and provides the best stewardship for your money. We're opening up a new type of investing for everyone, and we believe that with the new opportunity, we're responsible for providing the best resources and information we can so you can make confident, measured investments.
So yes, I do 100% agree with everything that's in those last 5 videos I just showed you. But you know, let's play a bit of a game. The proof is in the pudding. So we're gonna go with Titan first. You will see every single day, Titan gives you information on what's going on in every facet of Titan's business. Now, what do I mean every facet of Titan's business? Titan is not just a venture capital thing. An arkinvest, Ark Ventures, which is part of this, is one piece of the puzzle. They have a flagship fund, which has all kinds of different investments in Google and Microsoft and those other things like that. Opportunities fund, which has things like Five Below and growing companies. They've got an offshore fund that's got companies like L'Oreal and other companies that you can't invest in easily in the United States. A market index fund, which just owns the spider. You can do crypto. You can even do diversified real estate or private credit inside of here. But again, what we're talking about today is the venture fund. And what I love about both Titan and Sweater is they educate you. You'll see, learn more. Look at this. Look at Venture Capital 101, liquidity and withdrawals, disruptive innovation. This has been out for less than a week, and they've already got this content. It's great, and you'll see those holdings, which we will come back to holdings in a second, because I want to talk about that. But here's the thing. On the flip side, on the flippity-floppity side, Sweater is very similar. If you go over to their portfolio, you'll see all their companies right there. Even if I were to click into some of these companies, I'm not going to scroll all the way down so you can see them, but if you are an owner in Sweater, if you own the Sweater fund, and both of these funds start at $500 to get in, if you own a Sweater fund, you have a gift card, a gift certificate for Graza, so you can get a discount on Graza. You've got a certificate for IQ Bar. Nomatica. I've had all of these things. I've had Graza. I've had IQ Bar. I've had Nomatica. I've had all of them. And they're very cool. They're very unique. But there is another thing here, which we're going to dig into. And I didn't want to dig into the beginning because you need to kind of see everything. But what's really cool, again, is if you want to learn about venture capital, you can learn all about it right here. These are both very, very, very similar concepts. So I guess the question is, why did I come to the conclusion that I came to saying that Sweater has a longer term horizon for return and is more risky than Titan, Ark Venture Fund on Titan? Why would I say that one is more risky than the other? And it really comes down to the portfolio companies, or as when I talk to people at Sweater, they call them portcos. It comes down to the portfolio companies and where they are along the stream, along the way, along what's going on. So here's what I want to do. I want to pull up in Crunchbase, which is owned by TechCrunch, which tells you all about startup companies, and I want to see where all of these companies are on their journey. And the older companies, we're going to go first. So we're going to look at Sweater, and we're going to see the Sweater companies first, and then we're going to go ahead and look at Titan. But this is Crunchbase. You can get a lot of this information for free, but not all of it. So you can't get all of it free, but you can get a lot of the information for free. And we're gonna go in the scheme of transparency. We're gonna go in the. We only have 5 companies from Kathy's startup, but from Sweater we've got a bunch of companies. And we're gonna go from the First 5 that were announced, because they announced 5 right at the smart start, just like Kathy did with the ARK Venture Fund. And then we're going to go to the newest. So let's go ahead. Granas Venture. Ganas. Ganas Ventures. Okay. So, Ganas Ventures. What's cool is we can see how much, in a real reality, how much companies have actually gotten in normal reality. But this is actually a kind of a startup, so you can only see one investor. Oh, look. Look at their only investor there so far that's listed on Crunchbase is Sweater. And, we can just make our life easier if we go. What's really cool, if you go to Crunchbase, you can just go to Crunchbase and Sweater. They won't all be here yet, but I can look at the eight investments, and we can see. Now, Titan is very transparent about this. I don't think they're going to be transparent about it for a week or two till everybody gets their funds in, and we'll talk about that in a minute. But, Titan is very transparent, telling you how much is invested. We can see that Sweater has deployed about $14 million in funding so far that they have publicly disclosed. Now, on a call with Jesse that happened about a week and a half or so ago, about a week and a half ago, on a call with Jesse Rando, who's the CEO of Sweater, so we can see our people. Jesse said the fund was about half deployed. So Jesse, the co-founder and CEO, said the fund was about half deployed. So right now, we can guess that they've got about $30 million to deploy right there. And they've deployed it across these 8 investments, and there might actually be one more. So we can see when they did it, Q1, Q2, Q3, food and beverage. And, we've taken a look at Granas Ventures. Now, another one they do is actually... So Granas Ventures, let's just talk about what it is real quick. It's just another venture capital fund. It's a fund in a fund, but it's a fund in South America. So it's a market that's very hard for an American venture capital firm to get into. They're getting into that venture capital space in South America. And Granas Ventures actually has some backings from Andreessen Horowitz and some other companies like that. There's good people involved. I do like Granas Ventures. Another one that's kind of an interesting one is Graza. Well, what does Graza do? Now, we've done reviews on all of these on this channel, but Graza makes olive oil. It's a direct-to-consumer olive oil company, and they make 2 different olive oils, one for squeezing and not cooking with, and one for sizzling and cooking with, and I didn't know there were 2 different olive oils. I didn't know you just don't go buy it at Target or Walmart, but there's the logic there, so, you can kind of see there's a bit about Graza, but these are still extremely early invested companies. I think that's the important thing. These are very, very early. You're not seeing multiple seed rounds here and there and everywhere. Here's After.com. You might go, this is also very early. It's a funeral company that will come and pick up your body and cremate it. That's what they do. They pick up your body and cremate it. And if you're fat like me, it costs more to cremate. Weird but true. Because they need 2 people to lift the body. We've done a whole video on this one as well, but realistically, this is so new. It's only in 2 states, and it's undercutting the funeral home service, which is, cool. But you see, we're very early here. Just kind of backing up the research I did before. Another one, it's called, well, speaking of early bird. Nowadays we're getting into the world where, people are saving up for their kids when they're born, but maybe the kid doesn't want to go to college. Maybe you don't need a 529 or something like that. What this allows you to do is this company, Early Bird, which is kind of lower to mid-stage, and I'll show you funding, because now we have some funding on the screen. Lower to mid-stage, this company, Early Bird, allows you to invest in a child's future by giving them money even before they're born. You can give to a child's money. So instead of giving them a stupid Barney doll, and I know Barney's the thing anymore, Paw Patrol, or Teletubbies, or something like that, you can give them $100 in stock. And it'll grow. When they get 18, they have a stock portfolio. I was very fortunate as I grew up. I had a stock account all the way through growing up. And we can actually see, they've had a total funding. They've had funding rounds. This is actually relatively far along. But you see, they're still just in a seed round. So they're pretty early to the game. Early bird, early to the game. Another one I didn't get at first that Sweater invested in was called Feet. F-E-A-T. You don't want to invest in Feet. That's a weird website. F-E-E-T. Don't go there. But Feet was kind of an early company that Sweater invested in here, and I didn't get it. It didn't click until I started really digging into this company, and I said, I think I get it. This is for people who are forced to go back to the office and want to wear office clothes that looks like you can wear them. They want to wear clothes that look like you can wear them in the office, but they feel like the pajamas they were wearing at home during COVID. The most comfortable athletic wear. But they don't only have athletic wear; they also have some stuff that you can wear some of this into the office. That's the logic. If I go to men, I go to tops, bottoms, hoodies, shirts, joggers, pants, like. The idea is that it's a way for people who want to rebel going to the office, being able to go back to the office and look somewhat fashionable and still feel comfortable. That's what feet is. Again, here's the coming theme that you've seen, is most of these are directly business to customer companies. So they're business to customer companies, and they're also extremely early. This one's so early, Parallel Health, that they actually haven't even shipped a product yet. I kind of see Parallel Health like the 23andMe of skincare. Again, I'm not one that cares much about my skin. I don't like to go outside. I don't like to get all red and everything like that. But they're kind of like the 23andMe of skincare. This is so early. They're in the pre-seed stage. What they do is they send you a kit, and you swab your skin, and then you send it back, and they analyze that, and eventually they're going to sell you product based on these kit you send back with your skin. Again, they haven't even sent out any of their product yet. This is how early this is. But again, it's a business to customer. So you're going to an end customer. Another one, Nada, really super interesting one, especially in the current real estate market. Now, they've raised quite a bit more because they need it. They allow you to invest in real estate in countries across the United States like their stocks. And they allow a normal consumer like you or me to invest in real estate across the U.S. So you can invest in real estate in Miami, you can invest in real estate in Tampa, in Houston, and other things like that. You can actually invest in real estate across all of these different spectrums and all of these different markets, which is really cool. But how they invest in the real estate is the really unique thing. They actually go to homeowners and they buy an option on their house. And you might go, why would you go to homeowners to buy an option on their house? Because then they can sell that option to people. And for the homeowner, there is actually no cost. But the homeowner does lose out on the appreciation of the house value on the option they bought, like a home equity line of credit, but with no actual credit charge. But you do give up appreciation on your house. Now, we may be in a depreciating market now, so, might be an interesting thing to look at. The first one of Sweater's companies, and we're going chronologically, the first one of Sweater's companies that really didn't touch normal people, and what I mean by normal people is a, business selling directly to a consumer, is ISO Talent. It is still technically a consumer touching company, but what they're doing, and again, they're still very early. You see, there's no more than $10 to $12 million in any of these companies. They're still very early. What they do is ISO Talent is specializes in hiring and growing businesses, and they're a headhunting firm, but they don't charge per hour. They charge in a different way. They charge per hour. Instead of taking money from what your candidate would get in the first year, they're actually charging per hour, and they're very different. But again, remember, these is very, 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 very early days. These are seed rounds. But again, this is mainly getting to the consumer. Then you've got another one that's getting to the consumer, which is called IQ Bar, which I actually tasted on this channel. And you see that's not there yet. So IQ BAR. IQ Bar is a food and beverage company. That's IQ Bar. They've had less than $500,000 in funding, but they're selling their bars like crazy. They're already in a lot of health food stores. Brick and mortar is ridiculous retail space to get. They've got that ridiculous retail space. IQ Bar. Direct to consumers. Another one that's direct to consumers that's in the Sweater portfolio is called Nomatica. DICA. And what is Nomatica? It's a wine company. And you can see they don't even have any history on anybody investing in Nomatica yet. Because remember, Crunchbase is still self-reported. But Nomatica's so early that their founder still does tastings via Zoom with people. This is so early, and it's mainly, I'm saying mainly, focused on a business to consumer. So it's not a business to another business, it's a business direct to another consumer. Then we've got Curate Capital, which is another venture capital fund inside of a venture capital fund. Now, in theory, eventually, is it possible that in ARK Ventures, Kathy puts her own funds inside of her venture capital fund? She could. So she could put her own stuff inside. So Curate Capital is based in Houston. Let's see. I just want to make sure we've got the right one. Right one. Right company. Yep, no, this is the right Curate Capital. And it's just a venture fund inside a venture fund. It's called a fund in fund. And then the last one and the most recent one that Sweater invested in is probably the most business to business, but it actually touches ACCREDIBLE. Accredible. They provide digital certificates. Now, here's what's interesting. I like this company. I really like this company. And why I really like this company is because out of all the companies, this one looks like an easy win. It looks closest to exit. They have a big relationship with LinkedIn, which LinkedIn is owned by Microsoft. And yes, we're not in a market right now that companies are going and buying other companies because the financing is too much and the stock price of these companies, if they're going to do a cash deal, it's hard to get the financing. And if they're going to do a stock deal, they're giving the stock at a very low value, and it'll go up in the future. So you won't see as many acquisitions and things like that in the future, but you'll see that Accredible has gotten a lot of funding, and this is the one with the most funding, the most funding rounds. Nada is very similar. Nada is very similar, but this is the one with it's beyond a seed round. I think Nada is the only one even close to this. So this and Nada, but Nada needs a lot of capital to do what they're doing. So, I mean, not as much, I don't think. They need, yeah. So those are further along. But I think that Accredible is the first one. And again, what they do is they make digital certificates you can put on your LinkedIn and stuff like that to show different certifications and stuff like that. But what you'll see, here's the important thing about all these companies we just looked at. And all these are in the Sweater Cashmere Fund. What you'll see is this is a business to consumer. So it's a business, generally speaking, that is focusing on businesses selling directly to consumers. Things, tangible things that people can go ahead and touch. Now, they're also a lot earlier. Like I said, and being a lot earlier, they're a lot more risky. But being a lot earlier, you have a lot more upside. If one of these companies does really well, you can make 10 times your investment, 20 times your investment. But remember, not all 9, 10 of these companies are going to do well. One or two of them might fail and fall off the face of the earth. If I'm a betting man, which I generally am, and the Sweater people are gonna get kind of angry at me for doing this when they watch this video, but I think the most likely company to fail in the Sweater portfolio so far is actually Parallel Health. Now, it might be because I have not gotten my aha moment and understood the purpose of it yet. But again, I think the most likely to fail is a skincare company that hasn't shipped any skincare yet. Again, I'm not their target demographic. I'd say out of these companies, the closest thing that's my target demographic is probably Nada. Probably not nothing. Nada, the place where you can buy and sell a single family real estate. But let's switch gears here, and I want to go over to Titan. So we're going to go over to Titan now, and we're going to look at the first funds in the ARK Venture Fund, the first companies in the ARK Venture Fund. Now, you're going to notice something. Flexport, Freenome, Epic Games, Chipper Cash, Mosaic ML. There's a difference here. So let's go ahead. I'm going to jump over here. Let's just see if ARK and ARK Ventures. Oh, employee profiles, similar companies. This is not it. That is, I don't believe that's it because they're yeah. ARK. Ooh, that's gonna be a fun challenge. ARK Fund. ARK. Okay, so we've got. Let's just see if we can find Kathy's. Oh my God. There's a lot of things there that are not ARK Ventures, so we're gonna have to look because this is so new. But let's take a look at Flexport. Now, in full transparency, I talked to a lot of people from all these companies. I talked to a lot of people that are also invested in the fund. And one of the ones was when I put out a Flexport video, they were like, why are there so many people that are following Flexport on Twitter? Well, I'll show you. This is just to give you an idea. If you look at these videos, you'll see there's one video that's gotten a lot more views than every other one in the scheme of things, and that's actually Flexport compared to Freenome, Flexport, Epic Games, Chipper Cash, and Mosaic ML. So Flexport's actually gotten a lot more overall views. So I want to start with that, and let's take a look. Here's something you're going to look at. What is the total amount of funding? Remember the biggest one we were looking at was like, the biggest amount of funding in Sweater we were looking at is like $12 million. Total amount of funding here is $2.2 billion with a B dollars. We're talking bigger fish here, which means it's more likely not to die tomorrow, but you're not going to make as much money before an IPO or an exit. And what are they? They are a logistics company for freight and other things like that, because your iPhone's got to move from China all the way to the US, or if you're not an iPhone person, hey, you know, your Samsung Foldy boys got to get from the Koreas all the way to the US. South Korea, not North Korea. It's got to get from the Koreas all the way to Korea over the way there. But you'll see this is a much, much, much bigger fish here. And they've even had exits, which means they've had companies that left their company, which is kind of wild, and they haven't gone public yet. And they've bought companies. So they've bought companies, they've had exits. This is in a whole different ballpark than what is in Sweater. And it might be because, hey, Kathy comes knocking, Kathy wants to invest. Hey, I'm coming from AR, not me, but I'm pretending to be Kathy, which Kathy, I'd love to have you on. Kathy's like, hey, I'm coming from ARK Invest, and I want to invest in your company. You're not going to say no to the one and only Kathy Wood. Now, again, let's take a look at the next company, which we're just going sequentially how they are in the Titan application. We go to Freenome. Freenome is a biotechnology company. What does Freenome do? Well, Freenome right here finds cancer in standard blood draws. So when you go to the doctor and you give blood, when you go, imagine for a minute, I give blood every time to the big red bus every 2 months when I can, and, they give you a cholesterol screening, and, they used to tell you whether you had the antibodies for the C word, and they'll tell you that you're fat, like every time I go, but, this can do cancer detection in a routine blood draw. So imagine if you give blood to the Red Cross, the big red bus, and they tell you you might have cancer in your body. But again, it's not the greatest news to hear unless you're watching The Room with Tommy Wiseau. If you get that joke, you get that joke. You're my people. But the idea is this also has a lot of funding, which means it's almost too big to fail. And something I want to point out that's kind of interesting was their last funding round. I want to show you this because this is kind of an interesting one. Their last funding round was super interesting because it was Roche, which is a giant pharmaceutical company. This ain't no tiny company, total funding. And Roche is now actually a public company, so they're worth a lot more than is even listed right there. So, this is one of those that in a couple years, if they prove really what they're doing, Roche is just going to buy this company. And, that's great. And you might make 2 times your investment. I'm talking theory here. You might make 2 times your investment, but you're not going to make the 10 times your investment in something you can make on Sweater that's a lot earlier, that's got $1 million or less than $1 million already in it. Let's take a look. Now, this is the biggest venture thing that I've seen, and this is the next one on the ARK Venture Fund list. It's Epic Games. Epic Games. Now, so if we're looking at Epic Games here, again, let's look at Epic Games. You look at Epic Games, you see what Epic Games is doing. You see they've got $6.4 billion in funding. That's a huge number. So, realistically, Epic Games did have a problem in the past with Tim Sweeney, their founder and stuff, little HR issue here and there. But Epic Games is the first company in this list that does kind of direct-to-consumer things with Fortnite and PlayerUnknown Battlegrounds and PUBG and those things like that. But they also do a lot of stuff, and I sent this to someone earlier today, and I want to kind of pull it up now because I think it's kind of cool. They also do a lot of stuff that's kind of unique, and I'll show you the stuff they do that's kind of unique. Let me pull this up right here because I want to show it to you. Is gaming tech can be used to walk through buildings before they're even constructed. This came out today, well, as yesterday, September 29th, after ARK announced their investment in here, and I want to kind of show this to you because it's really cool. So yeah, so what this is a practical use for gaming technology in the real world. And this is kind of what Kathy's looking at. But again, remember, your upside is not as big when a company's already got $6.4 billion in funding and, could go public at any time, well, when interest rates go down. That's what's really keeping a lot of companies from going public nowadays is the high interest rates. But they're even shooting for the moon here. Kathy's shooting for some interesting stuff with another company here called Chipper Cash. So Chipper Cash. And what is Chipper Cash? Well, Chipper Cash is kind of like Chipper Cash right here. It's like the Square and the Robinhood of Africa. The Square, the Coinbase, the Robinhood of Africa. And this is a very small one, and this is direct to consumer. So this is generally, Chipper Cash is going direct to consumer. It's a San Francisco-based company focusing mainly on African consumers being able to transfer money cross-border, being able to get into cryptocurrencies and stuff like that. I think it's really cool, but this is the only one in here that's really direct to consumer so far out of these 5. So you'll notice the Titan had a few that were direct to, that were business to business, but not many. Not Titan. Sweater had a few that were business to business, and Titan/Ark Ventures has this one, which is business to customer, and it's very early. So this means this company has a lot of upside. If Sweater's watching this, I would love if Sweater were getting this, because I know that more of my money would be in Chipper Cash, and I'd love to put more of my money in Chipper Cash. This is relatively small, but again, we're talking Sweater's largest one is 12 million. And this is $302 million. And the last one, and by far the most complex one of the companies in the ARK Venture Fund, is Mosaic ML. And what you'll see is Crunchbase does not even have any data on Mosaic ML. So if I go ahead and let me just Google it real quick. I want to show you. Mosaic ML. So they are a machine learning company. And you can see, again, they're playing in a big boy space of a lot of millions of dollars. The latest deal amount was $21.7 million. So again, this is a business-to-business, quite large company, 46, and they're a developer of machine learning and artificial intelligence training algorithms designed to improve the efficiency of neural networks. But what they do specifically is they do it for a low cost, so other startups can actually get into machine learning and neural networks. So it kind of works along Kathy's pillars. Again, all of these are along the pillars that Kathy did earlier: the health, the finances. Epic Games is kind of in the VR, AR technology space. Freenome is genetics, and Flexport is logistics. This is all along what Kathy's really looking at and what Kathy really likes, and this really does kind of follow the other funds that are out nowadays with the other ARK funds. Now, what do I have invested so far? Out of full transparency, I want to start with Sweater. Sweater, at this exact point in time, September 30th of 2022, I currently have invested in Sweater $22,864. Now, I like this. This is kind of set it and forget it money. One thing that both of these companies do very similar is how you could take money out of the fund. I don't know who copied who, but Sweater was there first, so I'm going to give Sweater credit. You can take 5%, well, anybody, the whole fund, can remove 5% every quarter from the fund. So they keep 5% liquid that you can remove it. That's how they're getting traditional investors in. And it seems to be an agreement that was made with the SEC because they both do it. But, I can't take this money out right away. I get penalized for taking this money out right away. So this is long-term money that'll be here for 5 to 7 years. And, I'm not these companies, so I can't make financial claims. But I'd like to see this double, triple, quadruple, centuple 10 times with some of these companies succeeding. Now, I will tell you my problem with Titan and ARK Ventures is I actually can't invest yet. I want to invest, but I can't invest yet. And the way I can't invest yet is they announced this really cool thing, and what did they do? They put their whole site under maintenance from the 28th until Monday. Now, I did speak to executives at Titan that said this was out of their control. Who runs their back end and who runs their accounts is a company called Apex. And Apex decided to schedule them for transitioning all their people over literally the same week that this was announced by Kathy. But I cannot, even if I try and go invest. Some of my friends, I got them to sign up and put money into here. but I cannot invest even if I wanted to in the ARK Venture Fund because my account, which I'm one of the original people in Titan back in the day, one of the first few thousand to join, my account has not been upgraded yet to allow me to invest. Now, how much would I invest in the venture fund if I could? I would probably start with about $10,000. Because I've seen the first 5 companies, I'd start with about $10,000. I like all these companies. I intrinsically like all these companies. But again, like I said in the beginning, there is not as much potential for growth, but there is a lot of stability in these companies on the Kathy side in the ARK Venture Fund. So, again, I just want to kind of review where we came from. I love both of these funds, and I think if you really have a mindset of investing and want to diversify, you should get into both of them. Sweater is better for business to consumer companies that are going to take much longer horizons to grow. But during that growth, they have a double-edged sword, much more likely to fail because they're a lot earlier, but much more likely to give you a bigger return on your investment. Now, Titan and Kathy Wood's ARK Venture, on the other hand, has companies that have already matured, they're already grown up, they're waiting for an acquisition. Again, we're talking the majority. There's a few little startups in there too. But the majority are big companies like Epic and other big companies like that that are ready to go, that are ready to get acquired. So I think that it's a safer investment. I can't believe I'm saying something Kathy's done is safe, but I did ride her funds in 2019, and I am a big Tesla bull and still contain to be a big Tesla bull to this day. I like where these are both headed. I like both of these funds. That is not a cop-out. I've given you exact reasons why I'm in both of these funds. But as of right now, to be in the venture space, I'm actually putting, if I had to give you a real answer, wearing an arkinvest shirt, only knowing 5 of the companies that ARK Ventures is going to do, I like Sweater more. I think they both have good communication and everything like that, but I want to make a bigger return on my money, and I don't mind a more risk, more reward scenario. So I didn't skirt around the answer. I gave you a real answer. If I had to choose to put 10 grand in one place, or, some of you watching, remember, both of these start at $500. If you were going to put $500 in one place, I'd put them in Sweater. Because I think the potential for that $500 to grow is much higher with the existing portfolio companies in Sweater. And I'm a risk taker, so you also have the same potential to lose that money, but no risk and no reward. This was a review of, what's the same, what's different, which do I like more? Sweater did take the crown right there. And of Sweater versus ARK Ventures on the Titan application. My name's Richard from No Pants Profits. If you got any questions, post them in the comments below. I'm going to be sure when any of these two companies, of the either Sweater or ARK Ventures, add a new company, I will be doing a video, hopefully the same day, unless I'm traveling. If you do have questions on any of the companies or anything like that, go ahead and drop a comment below. This is Richard from No Pants Profits. Still not wearing any pants. And reminding you that when you wear no pants, you've only got one thing left to lose. And you know what that is? That's your shirt. Bye!